Welcome everybody to our today's webinar about carbon footprint. My name is Mike van Kaufenberg. I'm the founder and director of Deveco, a consultancy firm ESG with a specialization in carbon footprint. And we are part of the Atos Group. And I am joined by my colleague Manon.
Good morning.
Can you introduce yourself?
Yes, of course. So I'm Manon Canty. I'm a senior CSI consultant at Deveco.
So the topic today is about the corporate carbon footprint in terms of compliance, but beyond that also to see how it is very necessary for companies. And from the agenda, we of course start with the carbon footprint itself to explain what it is, how it is calculated, what methodologies are behind, and then see, of course, why it is a key metric in terms of compliance and also in terms of improving and creating values in the company. Then we will have a short outlook about assessment, how the assessment is in the procedure done, and of course the most important, the targeting. So it is necessary, if you know what your carbon footprint is, how you can reduce it in advance and what methodologies are behind. At the end, we will have a short outlook about calculation tools, how they can help you to realize this and to manage it. And at the end, we will have a question and answer session. So please, if you have questions, just send them in the chat. We will try to respond to all of them at the end. Otherwise, we will send you the answer after the webinar. And in terms of organizations, after the webinar, we will get an email from us. Thank you that you have attended, but also to explain how you can get a certification of participation if you need one. And also, if you want to have our presentation of today, we will send it across to you. And also a link if you want to review the webinar itself, or if you want to share it with colleagues and other persons. So let's just start right away with the carbon footprint itself. So basically, we have to differentiate between a corporate carbon footprint, which is the quantity of greenhouse gases that are attributable to the activity of an organization, a company. Besides that, you often hear about the PCF, the product carbon footprint, which is really the part of the emissions that you can attribute to a service or a concrete product. So there are two methods of measuring. You have the bottom-up, where you do the so-called life cycle assessment, really based on the product itself, but you also can decline it from the corporate carbon footprint and to attribute which part of the corporate carbon footprint can be attributed to a single product. Commonly, we always talk about CO2 when we're talking about carbon footprint, but it's not the only greenhouse gas that is taken in consideration. There are 7 in total. 6 of them have been fixed in the so-called Kyoto Protocol, and there was a 7th that is the NF3, which have been added later on the Doha conference. So why is it always expressed in CO2? All these molecules, I can express this on the first 2, one CO2 and methane. The other one, for me, are very difficult to pronounce. They are very complex. But each of these molecules, they have what they call a global warming potential. So this warming potential is how much they reflect the energy that is going to the space, again to Earth, and thus creating this greenhouse gas effect. And in order to have a common unit, because every molecule has a different warming potential, for instance, CH4 methane is 25 times more potential than CO2. So they take the potential of the CO2 and they calculate the other ones according to the one of the CO2. That's why when you read a carbon footprint, it's always expressed in CO2 equivalent. That's how you can understand this E or this EQ when you see a carbon footprint. The carbon footprint is always calculated by data that you collect, data of elements that in your value chain produce emissions, and these data are multiplied with a so-called emission factor. For example, if you have electricity, because electricity, the production of electricity also produces emissions. You take, for instance, kilowatt-hour electricity, and you have to multiply it with the factor emissions. In this case, it's 400 gram CO2 equivalents per kilowatt hour, and then you get how much kilogram CO2 equivalent your consumption of electricity does. So basically, it's quite simple, but it can be tricky because of the data that you have to find. So some data are quite easy and quite available, like the consumption of fuel, the consumption of electricity, and if you get the direct emissions of your supplier regarding the products, then it's quite easy. But other data have to be compiled in order that you can use them with existing and available emission factors. So that's a more complicated part. And of course, in some cases, you don't have data available at all. And then in order to have a complete carbon footprint, you can use the so-called proxies, which are not very precise, but they allow you to have in the first time a complete carbon footprint, and of course with the objective to get better data in time to be more precise. There are basically three main methodologies to assess a carbon footprint. The most common and the most widely used in the world is the so-called greenhouse gas protocol, GHG protocol. You have probably already seen it in your readings. And it is basically classified in three scopes that I will explain a little more in detail on the next slide. Two other methodologies that are used is the ISO 14064-1, which is an ISO norm, and in the French-speaking part of Europe, there is an own method which is called bilan carbone. It was created by the agency of ADEME, which belongs to the Ministry of Ecology in France. And basically, they are more or less the same with some small differences in definitions and in classification, but all three are based on the same approach of scope 1, scope 2, and scope 3. So if we see the scheme of a complete carbon footprint, like in this case, the one of the GHG protocol, to assess the inventory, the three scopes are according to the value chain. So the scope 1 are all the direct emissions that can be that are provoked by the infrastructure, the fixed and the mobile infrastructure that a company owns or controls. So, for instance, the company cars that you lease but that you control from A to Z, you decide when you drive, how much you consume. And this is calculated in scope 1. Scope 2 is the first indirect scope, and it's related to the purchase of energy, mainly always electricity, but it can also be the heating that you purchase from a heating station, from a common collective heating stations. These two scopes are quite easy to calculate because it's mainly linked to direct consummations, where you normally have the invoices so that you can take the quantities itself. More tricky is the scope 3, which is about all the other indirect emissions throughout your value chain, and taking the upstream activities, starting with purchased goods and services. So everything that you purchase has emitted at the production of these goods or these services. They have emitted CO2. Then this part you have to include in your carbon footprint inventory. And of course, capital goods, if all the infrastructure that you own or that you control, like cars or like buildings, when they have been constructed or built, you have to integrate these emissions in also in your inventory. You have everything regarding transportation and distribution. So if you import from far away from China goods, then the transport can be quite emissive, and you have to integrate it. All the waste that you produce in your activities, of course, produce emissions, because when they have to be burned or recycled, all these procedures are emissive. Then regarding your stuff, you have everything that is linked to the business travel and also to the commuting. Coming to work, they need to ride a car, take the public transportation, and all these activities are also to be taken in consideration. And of course, if you do not own your infrastructure and you just lease it, or you have a loan, then the part of this is also taken not in the scope 1, but in the scope 3. On the downstream activities, of course, if you are a production company, you need to transport or to distribute your goods to the final customer, which is also emissive and which is to be taken in consideration. If you produce, for instance, final products that are again used in a processing and in the production, these emissions costs of that have to be included. And of course, if you produce a good that is used and during the usage of it will have emissions, for instance, a car producer, he has to include in his carbon footprint the life cycle emissions of the cars that he has sold in his carbon footprint, which can be really big amounts to take in consideration. Of course, at some time, these products, they come to an end of life. They have to be destructed or recycled or whatever. This process, all the emissions of this process have to be included. And then on the other side, if you are an owner of assets that you lease to somebody, but the usage of these lease assets has to be included, then of course, when you have franchises, the usage of franchises has to be included. And then especially for financial institution, all the part of the investments that you have and the emissions cost of this investment have to be included. So the common question that we always get is, so why do we have to include all this? Because it should be included in the scope 1 and 2 of the company's upstreams or downstreams that we take into consideration. It is because you have the influence. For instance, if you take the suppliers, you can choose which supplier you can take for your purchases. So if you have two suppliers with the same, more or less the same product, the same price, it can be decisive to take the one who has better emission on his products, because thus you can lower your footprint and you give the incentive and the sensibilization to your suppliers to reduce their carbon footprint. And the same thing is also on the downstream activities. A car producer can, of course, choose to produce less emissive cars and thus have a positive impact on climate with his production and give a better choice for his customers to choose it. We put this red color in the frame in investment because just to come to the financed emissions, there is a separate framework which is called the PCAF. It's the Partnership for Carbon Accounting Financials. They developed the so-called GHG accounting and reporting standard for financial industry, shortly Financed Emission Standard. and it is in line with the greenhouse gas protocol. It has been reviewed by the greenhouse gas protocol and approved as a methodology, and it is used for a lot of financial instruments like listed equity and corporate bonds, like business loans, unlisted equities, projects, finance projects, and commercial real estates, and mortgages, and motor vehicle loans. So, and it is not used in this basis of climate assessment risk, like the TCFD, the Task Force on Climate-Related Financial Disclosures, and also to set targets, like in the frame of the SBTI, which Manon will explain more in details later. So if I come back, you will see the different categories, and the category 15 of the scope 3 is investments. And it is built on GHG protocol. So basically, all the assets in the portfolio should be evaluated according to GHG protocol, so that you have the carbon footprint of each asset. And the PCAF gives, according to the different types of investments, it gives the methodology how to calculate the part of it that you have to integrate in your assessment of the inventory. So, of course, it is if you have a large portfolio, it is not really granted that every asset has done its carbon footprint. So you can take those that have it, and for the others, you can use proxies. Proxies from sectorial, sectorial data, which can give you a rough estimation of the impact of your investment. But the objective, of course, in order to be enabled to reduce your carbon footprint, you need more quality data, and thus having a plan that the different assets in your portfolio should come to, in some terms, to a real GHG protocol established inventory, so that you have high quality and solid data for your overall carbon footprint. So when we come to the point why this carbon footprint, once it is calculated, why it is a key metric. So of course it is a key metric regarding the overall objective. The overall objective is that we manage that the global warming, according to the Paris Agreement of 2015, will not exceed 1.5 degrees. And thus it is translated, these objectives, in several obligations or frameworks, like the SBTI, who says then, in order to, and I will explain that more in detail later, you have to reduce up to beginning 2020 to 2030, 42% of your emissions, and on a long-time target, which is 2050, to be neutral or at least reduce it by 90%. The European Union has, in their Green Deal, defined that till 2030, we must achieve in Europe a 55% reduction regarding the emissions of 1990, and that we, according to Paris, should be in Europe carbon neutral by 2050. And they lately emphasized this objective, and they still, even with, as we saw in our last webinar, that with the Omnibus, they came a little back with the obligation of reporting, but they emphasized now that this carbon neutrality is and will stay the main objective. And with the Clean Industrial Deal, they really have launched a huge program of investment to reach this goal. And then overall, the world, you have in different countries national climate objectives, mostly in accordance with the Paris Agreement. If we come to the more reporting obligations about the compliance, then you have, of course, on the European side, on the left side, you see that you have some frameworks and some reporting obligations where the carbon footprint is used and it is mandatory. For instance, the CSRD, the Corporate Social Sustainability Reporting Directive, which has been postponed by 2 years, but which is still actual and will come. You need to report in the metrics about your 3-scope carbon footprint. If you take the smaller version of the CSRD for the SMEs, for the small and medium enterprise, which is the VSME, the so-called voluntary standards for small and medium enterprises, it is also in the basic module mandatory to establish your carbon footprint on at least on scope 1 and 2. And that it is highly recommended to do it also on the scope 3. The CSDDD, which will be much more linked to the CSRD, so the Corporate Sustainability Due Diligence Directive, will also, of course, need that you do the due diligence on your climate strategies. And of course, if you don't know what your impact is in terms of quantity, it is quite difficult to have a strategy on it. Another framework is the so-called CBAM. It's the Carbon Border Adjustment Mechanism, which will be applicable soon, and where, of course, current companies needs to do at least the scope 1 and 2 that they have to report on to show that they are in line with local producers, or otherwise have to make a compensation. And then more indirectly, but also very important, is the SFDR for the financial institutions, the Sustainability Financial Disclosure disclosures that they have to do, and where, for instance, in the so-called principal adverse impacts on climate, of course, the assessment of the actual carbon footprint is necessary. So you also need it for that part. What we see actually at the moment, the framework that is really evolving the most rapidly is the TCFD, the Task Force on Climate-Related Financial Disclosures, who is used more or less in a mandatory way in lots of disclosure standards throughout the world. It has been integrated totally in the IFRS with the S2 and the S1, especially on the S2. It's the International Financial Reporting Standards, which issued their own standards on sustainability reporting, and the TCFD is mandated. The TCFD is a structure where you are disclosing about your governance, how you treat the topic of climate change, your strategy, the risks, and of course, the metrics and the targets. And the metrics and the targets is the assessment of your carbon footprint. And it is fully integrated now in the IFRS, and thus very important. And you see that the TCFD is mandatory or quasi-mandatory. We put Europe with the CSRD, because if you read the standards, the ESRS of the CSRD, it's really in line with the TCFD. And in some countries, like in UK, New Zealand, Japan, Canada, and Australia, there are concrete legislations that makes it mandatory to use the TCFD. But this is the more obliging part of how to use the carbon footprint. So it will become more and more demanded from a legislation point of view. But this is not everything about it. It is also very important to take a view about it from the perspective of the company itself, how it can use it, because it is very important to see what are the risks, but also the opportunities to establish your carbon footprint and to see how to use it. So when we take the risks, you have basically two categories. You have the physical risk, of course, that are resulting from climate change events like hurricanes, floods, wildfires, that we see more and more coming and happening throughout the world. And on a longer term shifts, for instance, to rising of sea levels. I mean, if you have your company at the border of the sea, you have to think about what will be the risks and the consequences physically for our company in near or a longer future. And then, of course, there are lots of risks regarding the transition, because there will be, and there are already, policies and legal risks regarding carbon pricing and emission, like the trading schemes and ETS, or if there will be new regulations coming. We see more and more companies that use the carbon footprint in a parallel internal accountancy. They really they fix a price on their emissions in order to anticipate when there will be a taxation on carbon in the future. What does that mean for us already now? How should it influence our investments for the future regarding the costs that might come in the future? Of course, there are technological risks, because your existing technologies that you use or that you sell can be obsolete in the near future regarding low carbon technologies. And of course, if you have to change your technologies, there will be costs of adaptation to have cleaner technologies in your companies. Then, of course, there are market risks, because we see that the consumers, they will have a huge pressing force with their decisions, that they can choose companies or products that are less emissive than others ones. And of course, you can have complete risk on your supply chain, with the supply chain pressure, or with a disruption. I mean, if you are using products in your production that are not available due to droughts or any climate influence, then you will have a problem to continue producing, and you have problems on your supply chains. And then, of course, last but not least, you have the risk of reputation loss. That if you are perceived as being not performant in your contribution on the climate impact, you can lose the confidence in investors. You can have negative media coverage, and thus again having emphasizing the market risk. But let's not be too pessimistic. There are also opportunities, and they are really to be taken in consideration, because often the insight of the carbon footprint gives you the points where you can lower it, and it is often linked to resource efficiency. Of course, energy resource in the first point, but also in other raw materials or water that you use, and lowering your CO2 impact immediately lowers also your costs. Okay, there is an investment to do, but there is a cost saving in the end. Also, the transition from the energy that you used from fossil energy moving to renewable energy can really be profitable. I was last week in Paris on the ESG summit, and there was a gentleman who was running one of the biggest Canadian pension funds, and they made a comparison about their investment, where they invested in renewable energies, and they stated that years after, they would have had 50% less revenue if they have done the same investment in fossil energies than in the renewable that they did. So it can be profitable also to invest in renewables. Then, of course, products and services. It is a huge opportunity if you are able to produce products or services that can help your clients, their adaptation or their mitigation of climate impact. Markets will be very decisive. We see it at the moment a lot in public tenders. where the measurement of or where the CO2 impact really is considered as one of the performance keys to evaluate your overall offer. For instance, in Luxembourg, we had a huge tender for the public transport, and ESG topics made up to 20%, and the biggest part was based on carbon efficiency. So if you do not perform on this subject, if you cannot prove that at least you have done your assessment and that you have a strategy to reduce it, you must lower your price a lot to be competitive with your competitors on such a tender. And of course, when you see the risk side of the market, you can also see it as an opportunity, because being performant on this subject can bring you new customers and give you new segments on the market. And of course, taking also the negative side and transforming it in a positive, the resilience. Well, if you can assure now with your reflections and your strategy for the future about how you will be resilient to the climate change, this will give you, of course, an opportunity and a competitive advantage against those who did not do at all those reflections. And of course, new technologies can also deepen these operational practices. Okay, so that was the part from compliance and how to use a carbon footprint, and I leave it now to Manon to come to the assessment procedures and, of course, the most important, the targeting.
Thank you, Mike. Yes, so I will give you in this chapter some insight about how to do a carbon footprint assessment and how to set targets. I will speak about a very known framework, which is called SBTi. So to start, there are some classical steps that you can follow if you want to do a carbon footprint project. So first, the preparation. So you need to set the boundaries, let's say, defining the scope of the assessment. So the categories you have to include and the categories you can exclude with justification always. Then you have the data collection. So you have to collect the most precise data, but that being said, it's always a trade-off between the time you have and the final accuracy of your carbon footprint. Then you have the step 3, which is the calculation. So you can use some platforms. We'll talk about later, a platform we use at Deveco. And you can also use the Excel file of the ADEME methodology. Then, of course, you have to exploit the results. So you have to make some analysis of, for instance, the main sources of emissions, the areas for improvement, and then, the most interesting part, establishing the action plan. So it's very important in this part to involve your stakeholders. So mostly internal stakeholders, but all your departments, so that the team is so that the whole team and the whole company is involved in this journey. And then the decarbonisation plan. So it's very useful to set clear targets, and you can use the most widely used methodology, which is the SBTi. We'll talk about later to calculate reduction targets in line with the Paris Agreement. Now we have seen the different steps. Let's focus a little bit more on the common mistake that we see very often. So one mistake which is often made is not taking into account certain positions because they don't seem directly under your control. So the question you have to ask you is, if you have a doubt, is there, you have to take the flow into account if it's necessary for the business activity to function normally. It's very, very important to think about this. Another mistake is to limit the number of sites considered. You cannot choose, unfortunately, you have to respect the methodology. And then the monetary values taken has to be taken at a last resort because they are less reliable. For instance, you have to deep dive into invoices sometimes, and your carbon footprint will be more relevant. So speaking of data, I will show this table. I will not have the time to deep dive into all the categories, but don't hesitate to ask for the presentation. But there are now some concrete example of the data collection job. So to find the data you need in a diversity of supports. So that's your job if you do if you are in charge of the data collection. So on the column on the left, you have the emission sources, which are the GRG protocol categories, and then the potential supports. That's where you can find the data you will need to assess the emissions corresponding to the categories. So it can be pretty easy. For instance, the consumption tracking or the invoices for energy emissions. But sometimes it can be tricky. For instance, you have to find the maintenance report with refill quantities for the direct fugitive emissions, or for the downstream distribution. You have to go deep into for instance, an Excel file about all the products you sold and the addresses of your clients. So it can be a little bit tricky sometimes, but yeah, another example I wanted to give also, it's the employee data. So for instance, you have expense reports for business travels, but you can also have like a questionnaire to have all the addresses of your employees. So you have to reach the HR. So you see through this lead that the whole company is involved in this process, and it's very important to think about that before launching the project. Maybe think about the right timing. So again, do not hesitate to ask for the presentation if you want to deep dive into this.
And also to ask if you have specific questions.
Exactly.
I mean, we have our email address. If you have specific questions on one or the other point, which does not seem clear or where you want to deepen in, do not hesitate. We will answer you.
Exactly. So once you have your carbon footprint, you need to improve, you need to reduce. So I will talk about SBTI. So SBTI, it means Science-Based Target Initiative. So it's an international initiative to help companies define targets for reducing greenhouse gas emissions. So it helps you to set targets, reduction targets aligned with global climate goals, now which is the Paris Agreement, and to keep global heating below catastrophic levels and reach net zero by 2050. So you can see indeed the 4.1 and 4.2 degrees Celsius. So it's a warming projected by 2100 if nothing is done, unfortunately. So there are a lot of benefits to comply, to engage with SBTI. You can boost investor confidence, you can build resilience, improve also your operational efficiency. That's why more and more companies are involved in this, are joining the SBTI. So in 2024, over 10,000 companies have approved targets and commitments. This is really beginning to be a standard, to be a way of working, especially for companies who want to show serious commitments to climate goals and avoid greenwashing. So in SBTI, you have two main types of targets. You have the near-term targets and the long-term, which are the same for net zero. So the near-term targets are between 5 to 10 years. Generally, you will see a lot up to 2050, 30, sorry. And also, it's very important to mention the scope 3 because, okay, there are indirect emissions. Maybe you feel you are not responsible for it, like purchase good or downstream transportation or the value chain emissions. But if so, SBTi said that if scope 3 is a large part of your total emission, 40% at least, they must be included in your targets. It's very important to understand this, so because it's the case of most companies. And the target has to cover at least 2/3 of your total scope 3. So now how to calculate those targets? So scope 1 and 3 must be aligned with 1 plus 1.5 degrees Celsius. And the SBTi gives a formula. So it's very important to have this in mind. So for instance, for the base year after 2020, you have to calculate, so 4.2% multiplied by target year minus 2020. The 2020 is staying in the formula, even if you have the base year after, if you have the base year, let's say in 2024, it will be in the calculation 2020. It's very important. And for the scope 3 targets, it's different. You have to, instead of the 4.2%, it's 2.50%. Why? Because the alignment is not anymore 1.5 degrees Celsius. It's well below 2 degrees. That's why they call it like that. So you will see it. So 2 degrees maximum. So the formula is the same, but you have to put the 2.5%.
So maybe just to see that this is the general application to all kind of companies, but they also have sectorial methods, for instance, for transportation or for land and agriculture, which will go too far to list them all now, but also these sectorial specific companies can use the general methodology that we presented here to be in line. And this is a formula that gives you this target, and of course you need to show SBTi what are the actions that you intend to do to be in line with this target that you calculated based on their algorithm that they give at the disposal.
Exactly. I will talk just a little bit later about the two methodology, but indeed, it's an absolute contraction target that I was talking about. And just a small insight for SMEs. Maybe we have SMEs in the audience. So good news. There is no mandatory near-term targets for scope 3. And when I say near-term, it's like the 1.3 degrees Celsius. So you are not obliged to do that, but you have to calculate your emissions and to commit to, let's say, ambitious measurements and reduction. And you have also to communicate publicly on these targets. So it's more flexible, but it's not easy. So in addition to the near targets, you have the long-term targets. You are not obliged to do it, but it's good. You have to put the targets at minimum 10 years. You will see up to 2050. And the standard is called the SBTi net zero standard. So you have basically to reduce your emission of 90%. So of course you have scope 1, 2, and 3 emission to 0 or close to 0, and then you can use solution like carbon removal for the small amount that remains. Important information: you have to do the near target before doing the net zero. You have to be validated before doing this other long-term target. Thank you. So we'll see now the main steps of the SBTi process. So first, you have to engage. You write a letter to SBTi. You define that you want to set a target. Very simple. Then it's different. You have 3 years to develop a whole reduction plan. So you must work on defining your emission reduction target in accordance with the carbon budget. So the carbon budget is the quantity of CO2 that can be emitted in the atmosphere before warming does not exceed 1.5 degrees Celsius. And so you have this carbon budget allocation is allocated over time. So it's called the emission scenarios. And so you have to, let's say, work on this. And at the end, you will submit your targets to the SBTi for approval. So they will evaluate if targets are in compliance with the standards. So with evidence, of course, justifications. Then you can communicate if the target is validated to your stakeholders to announce it, and then report emissions, so disclose and progress each year. So it's quite a lot of effort, but it's a very interesting process. To finish this chapter, we wanted to explain a little bit the two main approaches. The two main approaches companies need to choose to calculate the SBTi targets. So first, the absolute. Sorry, I will start by the end, but the absolute is more logical. The absolute contraction approach, ACA, simple. You reduce your total emissions by a fixed percentage. And no matter how much your business grows. So it's for all sectors, and it's based on carbon budget scenarios. And then you have the sectoral decarbonisation approach, SDA, which is more detailed. It looks at your specific sector and company size and set a target based on that. For example, the energy sector has a different target than the transportation sector.
If the turnover is more than 5%?
Yeah. I will talk about it just after because. Okay, sorry. Okay, so let's say for financial institutions, it's different. So there is no choice possible between those two methods. So what is a financial institution for SBTi? It's an entity that generates 5% or more of its revenue from investment, lending, or insurance activities. So instead, there are two other methodologies, methods focused on indirect emissions linked to investment. That's what Mike told us about, the Scope 3 category 15. And so you have the portfolio coverage approach. The goal is to increase the percentage of your portfolio of your investment. I repeat, the goal is to increase the percentage of the portfolio of your investments that are aligned with science-based targets. It's the most simple, but then you have the temperature rating approach, which is a little bit more complex. So I was just saying that the temperature rating approach, so is to give each companies in your portfolio a score based on their emissions pathway, and then you aim to reduce the overall score to align with the 1.5 degrees Celsius targets. So I can conclude this chapter saying that to do the SBTi, you need to put a lot of efforts, that's true. But it's a very huge opportunity for your company in terms of resilience and also investor confidence and so on. I will now leave the floor to Mike who will tell you about the calculation tool we use at Deveco.
So these tools, I mean, they all are more or less the same. They have two functions. The first function is to just help you and to make your life easier to make the assessment, in order to organize the assessment, to collect the data, and of course, they give you the tools to convert the data with the databases of the emission factors that you can really calculate it. And then, of course, what is very useful with this kind of tools is that they have mostly integrated reporting tools so that you can easily produce visual or text reportings on any moment that you need them. They are also very well conceived, and the one that we use is Carbon Delete. It is really well done to manage complex structures of companies like holdings or like groups where you can go up to a 3-level depth of making the assessment of the carbon footprint and then consolidate them on the steps beyond, thus having a complete report about a complete portfolio or group, or going just one entity and have a precise information of that. If you take the next slide. So at the beginning, when we started this session, I was talking about the difference between a corporate carbon footprint and a product carbon footprint. Our tool that we use has also a tool internally that allows you to split your corporate carbon footprint on your products or services so that you can give precise product carbon footprint, which, as I showed you in the purchase, is very important to include. So if you are a supplier of a company and that they come to you and say, okay, I bought now this and this service or product from you, please give me the CO2 impact of it, then this kind of tools allow you to do so. Otherwise, this company has to go to the proxies and use monetary factor emissions, which are very imprecise, and they include an uncertainty of up to 80%. So having already better data from a supplier will dramatically lower this part of your carbon footprint. And inversely, if you are unable to give these figures to your client, they will be very happy because you give them the ammunition to have a proper carbon footprint and to reduce it. So we are at the end of our presentation. I really apologize for this technical problem that we have. I mean, we have tested and tested, and then it comes when we are live. That's live. I'm very sorry about this. So we're coming to the questions and answers, and have there been any questions that have been put in the chat?
We don't have questions.
So, or it was very precise and we explained everything and there is no questions left, or you say, okay, I have to think about it. So please feel free. You get an email from us later with all the details, and we can provide you on the presentation of today. And of course, you can send us any questions that regards this subject. We're also planning the next webinar. It will be on the 12th of June. Of course, in our email we will inform you, and we try to go a little deeper in this process of using the carbon footprint and creating value. So thank you very much for attending our webinar today, and I hope that it gives you more details and more insights about this quite complex subject of carbon footprint, and we would be glad to see you in our next webinar. Thank you very much.
Thank you.